off. Americans return to space as Discovery clears the tower.
TTM Trades, welcome to Market Monday. As I get adjusted here, so today we're gonna be talking about the SPY, VIX, gold, my personal play KODK, Kodak, and we also gonna be talking about what moved the market today. So let's just jump right into it. What caused the SPY to have its small gap up today with an open of 328 with a high of 329 and a low of 327. What caused that gap up today? All right, the two sectors that caused that move today was the technology sector and the healthcare sector, as you can see. Okay, now out of the 11 sectors that make up the S&P 500, as you can see here, the technology sector and the healthcare sector are the heaviest weighted sectors in the S&P 500 and or its ETF, the SPY, right? So if those two sectors move, then it normally does a pretty good job of moving the SPY along with it. So if we just come over here and we look at the weighting from 2015 up to now 2020, as you can see, the healthcare sector weighted is 14.63% of the S&P 500, and then if you look at the tech sector, it's roughly 27.47% of the S&P 500. So you put those two together, you're looking at about a 41 to 42% weighted, almost half of the S&P 500. Okay, so when those two sectors move, it would definitely move the SPY with it. All right, so what moved technology today was the Apple and Microsoft, one with their earnings, and two, both of them in the bid to try to purchase TikTok. So that definitely moved both of those stocks today. As you can see, Apple with the gap up, and Microsoft also with the gap up. So those two alone had a big deal in moving the SPY the way it did today. And then along with the healthcare sector, with the coronavirus, there's a lot of companies now that are coming along and showing positive testing for possibly coming up with a vaccine towards the coronavirus. So just a lot of good news going on in those two sectors right now. And again, those two sectors out of the 11 are the heavyweights of the overall S&P 500. So those are definitely two important sectors. So let's look at the SPY. All right. One thing I was keeping an eye on as we look here on the weekly chart, utilizing the double Bollinger Band strategy, I was looking at that 326 to 327 area right here. As you can see, where the top one standard deviation Bollinger Band is at. We pushed into it 2 weeks ago. Then last week we pushed into it, slightly breaking above it, and then finally this week, opening on Monday, we gapped right above it, closing at 328.79 with the top one standard BB sitting at 326.72. So we definitely want to hold that line of 326.72, just to round it up, 327 is where we want the SPY to hold on a day-to-day basis and do some consolidation right on that one standard deviation, so it can again break out and begin its uptrend. All right. Now, in order for that to happen, and in order for the weekly to maintain this type of position, the daily has to hold pretty strongly. Okay. Now, one thing about the daily that makes me nervous, the setup is still very bullish. Sean Day still above Buffett's averages. SPY still sitting above that 40-50 area, holding above both his short-term moving averages. So still a very bullish setup. Is on a day-to-day basis, the SPY, as you can see here, the past 2 or 3 weeks was consolidating heavy in that 320 to 323 range. As you can see here, just constantly sitting on top of that one standard deviation as support. And finally, we get the slight gap up this morning. Now, although we had that slight gap up this morning, as you can see down here, it wasn't on a lot of volume. Okay, so although a great move, it wasn't too convincing. Another thing, the buying momentum and the money that was flowing into the S&P 500 has kind of slowed down, right? As you can see, as we pulled from that low back in late March of 2017 and began rallying back up to that 300 area, the move was very strong. As you can see here, the PMO followed the momentum very strongly, but now it's starting to move sideways, which is showing signs of consolidation on the SPY from a day-to-day basis. Is it still in a very bullish setup? It is in a very bullish setup, but again, a lot of consolidating in this area with the volume tapering down. Okay, so what I would like to honestly see is a much stronger breakout to the upside, with a little bit more heavy buying volume. Clearly, there's some interest back around that 324 to 325 area. As you can see yesterday, when the price action dipped down in that area, it was immediately bought back up to create that candlestick with some above average buying volume. So just looking at this, we know that top 1 standard deviation Bollinger Band on the daily sitting right at 324.63 is a strong line of support. So myself personally, I would probably look for a pullback this week to that 324.50 area to try to buy in and then possibly ride that wave back up to the upside. Okay, but that's what we're looking at for the SPY right now. Now, talking about the SPY, we have to talk about the VIX, the Volatility Index, which moves inverse of the SPY. And again, the Volatility Index again is the amount of out of the money call and put options on a 16 and 44 day expiration time frame. Okay, so the more put options that are out of the money on a 16 to 44 day expiration time frame, the higher your VIX will rise to reflect that quote unquote fear due to hedge fund managers and retailers buying a lot of put options. As the VIX begins to lower, then again, that shows that there's a lot of call options being played into the market, and the VIX / volatility index begins to drop back down to its normalcy levels. Now, key levels I want to pay attention to on the VIX is one, you got that 2350 area that needs to break. All right, the VIX ran up to 85 on that drop, that deep drop in the late February, early March. Okay, hit that 2350 area, tried to create another high, which created a lower high, and then it pulled back down to that 2350 area with some slight buying in here right at that 2350 range on the weekly chart. Now, if we come back down to the daily, again, the buying momentum and or the put options, as far as out of the money put options being purchased on the CBOE board, you can see it's kind of stalled right here, right in that 2350 range. Okay, now we can begin to see the momentum again. I always say a stock, ETF, anything that's in a strong downtrend will stay below its bottom 1 standard deviation Bollinger Band and 2 standard deviation Bollinger Band as it begins to trend down, unable to break above its short-term moving average of the 30 period, which is the middle BB. So as you can see here, we're back below that 1 standard and 2 standard deviation Bollinger Band, unable to get back above its short-term average and its long-term 150 SMA average, which is the weekly middle Bollinger Band. So if the VIX loses this 2350 area, which it looks like it's about to happen, you will get a strong sell-off to the downside back to these levels of $20 to $15. If we go to the weekly chart, that next line of support is showing heavy right around $18.50. So about a $6 possible drop if the VIX is unable to hold that 2350 area. So what does that mean? All right, if the VIX can't hold that 2350 area and you get that $6 drop to about 1850, then that means the inverse, which is SPY, will rally to the upside. As you can see, you have the total opposite setup here. All right, the SPY will continue to break out to the upside and continue heading upwards to that next line of resistance sitting right around 335. Okay, and that's the SPY chart on the daily. So going back to the VIX on the daily, which is doing the inverse, again, it's sitting right in that 2350 range. If it loses this line of support, then per the weekly, that next line of support is sitting right around 1850, which is about a $6 drop on the VIX, and the SPY should rally based off of one another in the inverse. Okay, but the market is looking pretty bullish and it looked like the amount of put options into the market out of the money um, may be lowering and more call options may be going into the market, which will possibly break that 2350 range on the VIX. All right, let's talk about gold. Gold has been rallying something crazy here these past couple weeks, not even weeks, past couple months, and it continues to rally. Where can gold go from here? All right, as we pull up some of the intraday charts, I like to look at the 2-hour and the 30-minute chart, and I love to pinpoint my interest with the 5-minute chart. But looking at gold on a long-term rally on a month-to-month basis, very nice, strong, bullish setup as you see in the PMO. Nice swing, that tight consolidation area of all of 2018, 18 to 19 on a month-to-month basis from 129 to 111. You can see as the Bollinger Band width that entire time was below its average, and then finally you get the breakout here to signal the buying momentum coming in late October of 19, and it has been on a consistent uptrend ever since. Now, one key area to pay attention to is right back at that line of resistance, sitting right at 185 to 186 from back in 2011, and that's currently where we're sitting at now, sitting at 185.64. So we are right at that month-to-month basis resistance, so be careful buying call options to try to follow this one through. Again, that weekly setup is very bullish, so the buying momentum and the trend is very strong, holding above that top 1 standard and 2 standard deviation Bollinger Band to show that the trend is very intact. Now, again, on a day-to-day basis, we're sitting at that resistance line on a month-to-month basis, like we pointed out at that 185 to 186 area. As you can see here on a day-to-day basis, we're quite oversold. As you can see here, we created a high coming back down, and we're creating a lower high with a possible divergence here on the RSI compared to what we're seeing on the day-to-day. So I will possibly wait on a pullback here. As you can see, the volume is tapering off here as the trend begins to push upward. So, you get a divergence on the volume and the RSI. So I'll possibly wait on a pullback here. If we zoom in on the intraday chart, some of the key areas, number one on the daily one we want to look at is that 179, which is the top 1 standard deviation Bollinger Band, and that 172 area. Now, if the trend is very strong, we should not dip below that 172. So again, 179, 172. If we zoom into the 2-hour chart, we can see that momentum is beginning to fade as the PMO is beginning to top over. And as we see here, you got that 182 and a 180, which correlates to that 179. And then if we do get the 172 drop, which is the middle BB on the daily chart, looking at the 2-hour chart, that should be a drop back down in this area right where the 150 SMA is beginning to curl up and catch up with the overall momentum. If we get that drop back down this low. Okay, but again, I will wait for that 179 right here, pull back the bottom 1 standard deviation Bollinger Band, see if that holds on the 2-hour chart. If that fails to hold and it breaks, then you'll get that momentum back down to the downside right around 172 where this area consolidation is at, and hopefully that holds on the middle Bollinger Band before we get a breakout and continue back to the upside to try to break through that resistance of 185 to 186. So keep an eye on gold. Be careful buying puts. You are right at resistance from back in 2011, right where it topped out at 186. All right, and then my personal play for the week, I don't want necessarily say for the week. I don't plan on holding it too long. Again, we're going to hold it as long as the setup tells us to hold it, is Kodak. All right, the hype train for Kodak is over. Some news came out about Kodak not possibly, but getting a some type of deal with Trump as far as the COVID-19 virus, which doesn't make sense because Kodak isn't a pharmaceutical company, but still some fishy stuff behind the scenes with the director possibly doing some inside buying with call options prior to the news coming out, so on and so forth. But anyway, that hype train is over. As you can see, you had this strong gap up from, that's crazy, man, on a month-to-month basis from that low of 150 all the way up to the high of about, looks $90. Let's go to the weekly. Oh, $60, excuse me. So that was a strong bounce from $2 up to $60, a nice strong bull run. But now we're beginning to see that that momentum and that bullishness fade. So what I did was I took a position today right at $17 even. What I wanted to see on the 2-hour chart as this began to pull back, I wanted to see if the middle Bollinger Band held. So I took a position right at the middle BB. If we were to get a bounce to show some buying interest right in that area, then I would have closed my position out. But we broke straight through that middle Bollinger Band, heading towards the end of the day from that $17 area down to $14.84. So looking at the 30-minute chart, we're still pushing outside of the bands. But as we can see here on the 30-minute chart, we're looking at that 1160 area as the next line of support. So we'll see as this continues to head downward if we get that 1160 area of support. I'm currently holding puts on this one, 2-week puts out to August 20th. So we'll get the gap down to 1160. If some buying interest comes back in this range, then we'll simply switch sides and ride the unnecessary bullish train back up to the upside a little bit. But if that 1160 does not hold and we break through 1160, I don't see any immediate areas of support. As you can see, as I always say on a specific time frame, when you break outside of the Bollinger Bands, you go to the next higher time frame to find those levels of resistance. So on the 30-minute chart, we're literally pushing outside the bands, and with the 150 SMA as the last line of support. So if that 1160 doesn't hold, pushing outside of the bands continuously on the 30-minute chart. If I zoom out to the 2-hour chart, then again we're looking at 509 all the way down here. All right, now this was a very bullish run, so the bands have expanded pretty far out. So that seems like a pretty far drop down to 509. Okay, so just trying to find some levels in between. 30-minute chart wise, again, slide this back over here, looking at that 1160 on the 30-minute chart. If I go out to the daily, then we have the top 2 standard deviation Bollinger Band sitting at 1180. Again, if that 1160 1180 range doesn't hold like we talked about, then next we're looking at 771 on the daily, again with that 540 range on the 2-hour chart. So just keep this in mind, keep an eye on it. Right now the mid $11 range looks like the next line of support, and again if that doesn't hold, then it looks like we're going back down to the lowest 6s to mid 550 range on this drop. So, and this drop may happen pretty fast. Okay, there's really not a lot of buying interest, as you can see here on the 2-hour chart. The stock is just slowly bleeding out with the volume very low. There's no wicks at the bottom of these candlesticks to show that there's the slightest bit of buying interest in these ranges, and the volume is low, which shows steady selling. Now if we get to a point where we get down to that 1160 range, like we talked about on the 30-minute chart and the weekly chart, excuse me, that was the weekly chart we was looking at. If we get down to that range, and I began seeing on the 2-hour chart the volume starting to pick back up, trend up, and I'm starting to get some bottom wicks, then I know that's the area where the buying interest is occurring, which that would possibly fill this gap right here. Again, if we continue to bleed out like this very slowly with no volume ticking up to show buying interest, then we'll bleed back out to that to that low 6 to mid $5.50 range. And again, we'll just continue to hold until the setup tell us otherwise. All right, but that's it, you all. I mean, VIX Market Monday. You know, I just wanted to cover the basics on some of the things that I'm keeping an eye on. Discord chat down below. If you have not, hit the subscribe button, hit the thumbs up button, leave a comment. I'm glad to be back. I've been gone for a while, but till next time, TTM Trades, I'm out.
Listen, Tranquility Base here. The Eagle has landed.